Good afternoon, everyone, and thank you very much for joining me. This is the NFP live trade. It is the 3rd of February. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address is rshow@fxcm.com. And I just want to double check. Can you guys hear me? Can you see me and can you see the screen? Just let me know. Okay, excellent. Thank you. Thank you very much, Howard. Nice to have all of you guys on. Hey, Matthijs. All right, let's bring up the high risk investment warning. We've got about 5 minutes and we'll get the non-farm payroll out. Here's the market commentaries disclaimer. We'll keep this on screen. All right, and our references market scope and FXCM. All right, let's just take a look at the calendar, FXCM calendar. And just want to draw your attention to the non-farm payrolls. We're looking at about 190,000 roughly, which is down from 223,000. I want you guys just to pay special attention to the average hourly earnings. We'll see what those come in at. It's all about the inflation rate at the moment. Let's just talk about how we're going to trade this. We're going to put on a trade. We're going to put on the trade after the fact. We're not putting on a position before the announcement. We're going to put it on after the announcement. We're going to wait for the impulse move. Either the impulse is going to be up or the impulse move is going to go down. And then we're going to wait for the correction. Okay, so the correction comes in depending on the first impulse, and then we're going to try to catch the next move. Okay, so we're looking to get in. We're looking to get in on the correction, either long or short. The idea here is we're going to go for a take profit of 20 pips, stop loss 20 pips. Okay, so the initial risk to reward is going to be 1 for 1. All right, 1 for 1. And we're going to trail the stop. Okay, so if we can get out below 20 pips, that will be a success. If we can get out at 20 pips, we'll count that as a success. And of course, if we can get the 20 pips take profit, that would be first prize. We've got just less than 2 minutes. We'll be trading the Euro US dollar. We've got the 15-minute, we've got the hourly, and we've got the 1 minute. We'll be taking the trade on the 1 minute. All right. You can see we're actually pretty close to a resistance level here. So this has got me a little bit worried. We're pretty close to resistance here. So if there is a movement into the euro, we've got to beat that resistance, which is going to be something that we need to consider. Because if we come in at an inflation rate lower than expected, then of course we probably get an impulse into the euro. We're going to put on a small position, just to let you know the position will be a nominal position. All right, we've got 41 seconds here, and then we'll get the impulse. Looking at Euro US dollar, and then this is the stochastic. It's a slow stochastic. We're only looking at the percent K, and it's 15.5. Okay, 15.55, but I mean the idea is we are not looking at percent D. Okay, we've got 24 seconds. And we'll see if we can get some sort of information out around that. All right, here we go. Oh, big shoot down. So money flying out of the euro going into the US dollar. I suspect there's some sort of inflation that might coming in. We'll see if we can get some data around that. Okay, a lot of money going out of the euro into the US dollar. Okay, so getting the impulse move to the downside. A little bit of support coming now. Oh my goodness. All right, so we've got 517,000 jobs that were created. And the unemployment rate, which was due to tick up, has ticked down from 3.5 to 3.4. The inflation rate is at 0.3. This is a very, very strong report. Okay, let's see if we can get in here on a pullback. Okay. So probably want to go short euro US dollar if we can. This is an incredibly strong report. Just wonder if there's some sort of seasonal influence here. It doesn't really make sense. All right. Here's the pullback. So quite a bizarre report. Now what we'll do is we'll use our reference candles to try and get an entry position in here. So the reference candles, if we're looking to go short, it's a 3-candle setup. So this is how we're going to track our entry. Okay. So we're looking for a candle with the highest high. And then the candle to the right of it, we want to close below the reference candle, right? If we get that, we'll put on the short. So this could be a reference candle here. We've just got to see if we can get the next candle to close below its low. I'm just setting up the order, 20 pips, take profit, 20 pips, stop loss. Got 14 seconds here. Are we going to go short here? Here's the setup. Okay, here's the reference candle. Here's the entry. 20 pips to the stop loss, 20 pips to the take profit. Okay. Let's see if we can get the stop loss down. This is a live trade on live account. So either way, it's real money. Here's support. Okay, so the support's being a little troublesome at the moment. And it supports right at this S1 level. That's why it's such a that's why it's such a troubling level. It's right at a pivot. Okay, keep an eye on the stochastic. We need that stochastic to get under 20 and hold. If we get under 20 and hold, we shall do okay. But the support, this S1 support level is really influencing the trade at the moment. Okay, we're still trying to get through the support level. It's holding quite. It's quite an intense level we're trying to get past over here. So we've got the stochastic in the right area. So the momentum's there. We just need it now to, we need it to stick. This is a really tough trade. I'm hoping that we get another lower peak here because it's not behaving as one would think of such strong data. So I'm hoping we get another reference candle here. So this looks like it's another reference candle. We've got 30 seconds here. Now look at price. It's gone straight back into the support area. So there's a thick line of support here, and that's lining up with this S1 pivot. All right, so this looks like we're going to get, there's the lower peak. Okay, so peak, trough, low peak. Now we want the lower trough. We need the swing here. Keep an eye on that stochastic. That stochastic's measuring the momentum. Okay. Look how that resistance is holding. Amazing. Okay, so the support's kicking in now. So we're now in a trading range, right on the support level. You can see we're moving this way. Okay, we're starting to move sideways. If we can just get below this support level, I'm going to start bringing the stop down. Okay, another 23 seconds. Stochastic's in the right position. It's holding its momentum. Okay, there's a little bit of cooperation from the markets. Another 10 seconds. Support's still holding. Support's being steadfast. Got a crazy report. Okay, support's still holding. Okay, another 18 seconds. We'll get the next candle. Little timer counting down over here. Okay, we're getting the bears. All right, there we go. We're attacking the support. We're on the threshold. Let's bring some risk out of the trade. Okay, so we started off at 20 pips. Okay, we've pulled about 8 pips out of the risk. Okay, so that's improved the risk reward. Okay, we're moving. Just moving to just below, just above the peak over here. All right, we're going to put some profit. We're going to lock in profit now. Okay, so we've now locked in some profit, so we can't lose on the trade. So we're just now above the support and resistance. Okay, the stochastic's doing really well, moving in our direction. Okay, we're going to lock in some more profit yet. Okay, another 30 seconds here. Get the next candle. We're right close to our take profit. There we go. All right, we hit it on 20 pips. So we got the trade working in our favor. Let's just so we got it on 20 pips. So we entered there, took out the 20 pips. So trade, I think, pretty well executed. We got the risk out as quick as we could. And really surprising jobs report there. Over 500,000 jobs created and only 190,000 were forecast. So I'm going to dig into the numbers there. Certainly a surprise to me. I'm of the opinion that the job market is showing signs of cracks, and heavily surprised by the actual results there. Hope that you guys enjoyed that. Thanks, Howard. Thank you very much. Appreciate that. If there's any questions, go ahead and type those in. Any questions? Please go ahead, type those in. All right. We're going to wrap up here, guys. Thank you very much, and have a good weekend. And we shall speak on Monday. Yeah, it's definitely looking risk off here. Go deep. In effect, it's now played into the hands of the Fed. All right, we're going to wrap up. Thanks, guys, and chat with you on Monday.